Of Market Buzz. Today we're not going live, but we're keeping you up to date with the latest news that happened this week. Many investors were freaking out as the market was in turmoil. We had an idea of how the market was going to behave, but we weren't expecting the crazy moves that were happening this week. Many investors got scared, a lot of stop loss got activated, and we want to walk you through the wall of worry. I'm here with Dimitris, then Theo27 on eToro, and myself, and Mendoza 11. Make sure to check out our portfolios down below if you want to get trading ideas or maybe copy our portfolios. Again, this is not financial advice, it's just what we're doing with our money. So let's get started. We're going to talk today about the wall of worry. What are the things that are affecting the market and why is everybody freaking out? Is this the end of the stock market as we know it? Will America cease to exist? Will Trump make it blow up? In this episode of Market Buzz, we're going to find out. So Dimitris, there are, I think, a couple of things that are affecting the market, right? And I'm gonna put it like, and feel free to add any other things, like any other couple of things that you're seeing. But at least from my perspective, this week we saw that the AI bubble is starting to get affected, right? The storyline is starting to get sort of muddled, and it's very interesting how the market was so euphoric before, but now it's starting to get scared, even though the numbers are still not changed. So that's one of the topics we're going to be talking about today. We're going to be talking about the credit crisis and the liquidity crisis that many banks in the United States are seeing. We're seeing sort of a slowdown of money, how margin levels are all-time highs. Many people are using different products to kind of get a lot more risk into the markets. We're also going to be talking about the crypto crash, what happened with just like a couple of the big assets in this case. We're sort of seeing a slowdown. It's almost like a risk-off sentiment in the overall market. But I definitely want to touch on that because, like, again, it's just been weird moves. This last 2 weeks has been very, as you call it, sort of like toppy market feel, right? We're going to talk about the geopolitical story, what is happening with Russia, China, Israel, etc. We're going to talk about the mistakes of the Federal Reserve, if we believe there are any, or how the government shutdown is starting to affect the economy, because we agreed at the beginning that it was a nothing burger unless we started getting to the levels that we're at today. It's been more than almost 40 days. So we definitely going to address to see how we sort of trade our way out of this, or what are changes we're imposing here. And last but not least, the trade war. What do we see happening? What are the actions that the United States is taking and China is taking against them? In this episode of Market Buzz, we're going to tell you all of that. So, Dimitris, it's been a crazy week, and you did very well, right? Like I think you called out the markets just as we were expecting to see the moves, and you got them spot on. I would even say you got them better than me, like, because it's like I figured it out at the end, but it's like in the middle and the between, it seems that the market is acting how you believe, right? But let's start with the AI bubble. What are your thoughts on AI right now? Are we in a bubble? Is this the end?
So it's a good question. Are we in a bubble? And it's nothing compared to the dot-com bubble. That nothing made sense. The pets.com had like a crazy valuation without having any revenue. So we are not there. But some of the companies' valuations are a bit stretched. Palantir comes to mind. And what is it, like 500 times price to earnings, which is
Correct. It's come down a little bit after the last earnings, but it's still astronomical.
yeah, because Jim Cramer increased his target from 200 to 250, and the reverse happened after he gave his target. In my eyes, it's a way of the market showing their discomfort with how things might be going, and the earnings, even though they were great, they weren't spectacular. Okay, some cracks with Meta, even though it's like a one-time thing. So some investors start seeing some cracks, and you don't need too much to start taking profits. And then when they start taking profits, then people start selling. So, but to put things, to give people what we're talking about, earlier this week, Monday, Tuesday, you were in Cyprus and we went out for coffee and for dinner. And I told you, I don't know, something isn't feeling right. I'm getting 2021 Q4 vibes, tapping markets. And that's the feeling I got. And then you ask me, then what are you doing if that's the case? And what is your plan? I said, you know what? I'm not doing anything now because we have a little bit, this is Q4. So the whole thing is not going to unfold right now. But starting next year, something is going to happen. And you ask me, what is the game plan? And I gave you a couple of names: Walmart, Berkshire Hathaway, ExxonMobil. And that's exactly what rallied this week.
Yeah. No, it was. It definitely was. We found a lot of strength in safety, and those safety plays, people were taking money off the table, even though I do feel it was a bit unwarranted in some of the names. We definitely saw that moved into safety, and it was like, yo, I'm gonna sell right now because I'm sitting pretty with my gains, and I'll ask questions later. It's like shoot now, ask questions later, is the sentiment that I'm getting from the markets, right?
But it wasn't the safety. So there are two kinds of safety. There are the safety that with some upside, and there are the safety the utilities that is going nowhere. You're not losing money. So the second is a really bad one. You don't want to be in a market that everyone's looking utilities and they rally like crazy. They rally like growth. So that didn't happen. The quality with some upside safety, the Berkshire Hathaways, the ExxonMobil, the Walmart, those rally, which tells me the market worries, but not to the extent that bonds are going to rally. So that was an encouraging sign, actually, that we are not there yet.
Yeah.
But it's been a week, and I'm considering my next moves, which I told you what I'm going to do, start taking profits from tech, and then get into parts of the market that have potential upside without completely giving out on alpha. Like, there's no scenario to me that I invest in utilities and bonds. That's just giving up. And right?
Well, it's interesting because even the Berkshire Hathaway, how much cash do they have, right? So it's almost like a cash alternative.
It's almost like 400 billion. Okay, they can buy probably 90% of the companies in the S&P outright. They can only the Max 7 plus a couple of more companies cannot buy them. I mean, could they? No, because the SEC is going to limit them whether they can buy or not, but they can take big positions in each one of them. So it's interesting. It's interesting, and the bad feeling hasn't gone away. It's not a bad feeling. I don't want to freak out people, but I've seen this movie before.
Like, okay? The thing is for me, it feels like, look, we've reached sort of like a little bit of euphoria. I wouldn't call it a bubble, but I would call it like a euphoria phase where everybody's like, look, I told you so. If you weren't in tech, you're out. And there are a couple of statistics that I've heard thrown around that are kind of giving me that feel. And it's because, for example, I think 80% of hedge fund managers miss the S&P 500. So the eToro popular investors, I think we got it in the summit, are actually beating the markets.
Do you know why? Because they missed on NVIDIA.
Correct. They missed on tech. It's like
they missed on NVIDIA specifically. So that 5 trillion valuation that started from $1 trillion like 2 years ago or whatever it was, okay, that all upside, it was only enjoyed by the retail investor.
Well, that was the thing. It's like if you look at valuations and NVIDIA, like it's funny because NVIDIA is cheaper today than it was when the rally started.
Mm-hmm.
So it's like the big hedge fund managers could not go in and say, hey, I'm going to buy a crazy name, maybe like Palantir in this case, right? So it's like, it's if any metrics tells you that it's overvalued, right? So this is where it gets scary. This is where it gets interesting. So those are at least my thoughts. I'm not feeling the sort of like toppiness, you know what I mean? Because the thing is just like, I do think that we still have room to run.
Mm-hmm.
Like there are things that could happen, but right now it's the fact that we're just not getting the data. We're not getting that clarity tells me that there is more FUD, fear, uncertainty, and doubt than actually a toppy market that is like, okay, we're done. AI is going nowhere, because
You know what? I don't think it's about the AI story, because the AI story is solid, because the companies that invest with the capex, they have earnings, and they have. It's not that they're losing money. It's not that they don't have revenue like back in the day. But remember what I told you on Tuesday or Monday? What day was it? I said to you, do you imagine the shutdown lasting a bit longer, and by the time we get the data, we get a spike on the unemployment? And yesterday, we got the numbers that this past October was the highest October job losses in 20 years.
yeah.
So we got the ADP numbers saying one thing, then we're getting this saying something different, and we don't know what is going on, right?
Yeah.
So this absence of data, and then everything is going to show up when they show up, when the market opens. And last night, it was like a vote, and it didn't happen. So we go into next week with this. I'm afraid that we're going to get some numbers that we're not going to like. And
Like I think we're going to be in the same trend. You know what I mean? Like the trend that we've going, but nothing has broken yet. You know what I mean? Like, yeah, we've got in unemployment, and we're seeing it like a little shuffle here and there. And sure, we are seeing sort of like the biggest job losses. But the question is, can the American economy take in those jobs? Are we in the same position we were in? I think it was 2008. Like I think it's the highest October since 2008 or something. So
yeah,
it was a big deal. It was a big spook.
It's been a long time, yes.
Yeah,
it's been a long time. And they claim that this is the AI replacing humans.
But it cannot happen that fast.
But so the stock market is going to reward a company that says we're firing people because of AI, meaning we're saving money and we're getting more productive. So is that an excuse for people to fire people? I mean, I don't know. You can look into it a couple of different ways, but you're right. Nothing has broken yet, but too many things are happening at once.
Correct.
Right?
Okay. No, but that's the thing. It's like it's interesting that you say that. But this has been happening for a while now. You know what I mean? Like none of the stories are new. Like it's not like we're getting all of these stories at the same time. But the stories have been happening as the economy just continues to tick up. We had the trade war, we had the unemployment, we had the weakness in employment sort of start picking up. We knew that the unemployment was going to start ticking up. We haven't seen it fully tick up, because but the thing is usually you get the tick up at the end of the recession, right? So that's also something we have to take into consideration. But it's just like all of this little things are happening at the same time, but they've been happening for a while. So it just feels that now the market wants to pay attention.
And the government shutdown doesn't help at all.
At all, because we're just not getting any clarity. That's the thing that scares me the most, right?
We're not getting any clarity, and we're not getting a timeline, like how long it's going to take.
Yeah.
So I think today's day 39, and it's probably going to call like for 40, 45 days. Which is interesting to be in our lifetime to witness, like in real time while we're invested, the longest shutdown in history.
Yeah,
it's something to use for future references. That okay, I know what happened that time, but too many things are happening at once, and at the same time, the market has been rallying the way it has, and valuations in some parts of the market are getting a bit expensive.
Yeah.
So that worries people that Wall Street is doing great and Main Street is hurting.
Yeah.
And that's my worry too. We're probably going to end up the year like with 20%. It's going to be the third straight year with 20+%. Only happened 3 times in history, prior to .com and prior to 1929. So I know there are people out there, institutional investors, like older people, that they look this and say, you know what, this is not good. I don't like this.
But you know what's funny? They're not staying in cash. You
No.
know, it's funny because we're seeing the money move to different places. We're still not going to cash. And when cash is king is when the recession is here. You know what I mean? It's whenever we have that liquidity crisis. So let's pivot a little bit.
Yes.
Okay. Talk about the second part, which is
Yes.
like the credit crisis and the liquidity crisis that we're seeing in markets right now. Right. I think like I want to start with a couple of statistics just to give you an idea. I think we are at the time where there are the most brokers accounts ever. I think in the last couple of years, the access that eToro, Robinhood, and all of these brokers has created has like sort of democratized finance in a way. So there's a lot more money into the system, even though it's retail mostly. Retail now has access, which now plays a big part in the economy, right? I think retail has bought the dip massively every single time they've had a possibility, like an opportunity to buy it.
Yesterday too. Yesterday was
correct.
Yes.
Correct, right? Because it feels that right now it's like hedge funds are like, no, we're scared right now because it's like, look, like I'm in profit. I'm just going to capitalize my gains so I can say, look at my year, it's fantastic. But then you have retail that is like, let it ride, baby, let it ride, buy dumb dips, you know. And it's like this dip took a little bit longer to buy because we saw that that's 3 dips have been bought in a day or less. So this one actually took a little bit longer, which actually helps me believe that there's like breadth in this market and there's actually people selling and buying opportunities are being created. For example, Meta is a fantastic example of this. You know, it's like where we saw just continuous negativity on Meta just because of the size of the balance sheet and the size of the company is smaller than the rest. So there's a lot more risk with them. So people are deciding just to take profits. But it's creating opportunities. So again, it creates opportunities. But what are your thoughts on this? So for example, the bank, I think it was Zion Bank that came out and talked about the sort of the equity, the problems with lending that they were having, right? So I think they lost around somewhere in the range of like 300 to 400 million, or something along those lines.
So when I was driving Jorge, our good friend, Bullish Bearish, he was telling me about the credit delinquencies. Am I saying right?
Yeah.
He was expressing his concerns, but the amounts are almost insignificant.
Yeah. No, sorry. It's not even to those numbers. It's like 50, 60 million.
Yeah.
Yeah, it's not even the 300. Sorry, my bad. That was a mistake on my part.
No, I'm not saying. Even though even 300 million is like insignificant, like to the broad U.S. market. Now from there, the lesson there is don't invest in regionals and smaller banks. I mean, that's a no-brainer. If you're playing with your luck, if you're investing in the regionals, like why? I don't get it. What the 35% year to date from Goldman Sachs is not good enough for you? The 25% from JPM or whatever it is not good enough for you? Do you have to invest in regionals if you are like an international investor like we are? No, if you're in the United States and you are like exposed in one way or another to that regional bank, fine. But if you're sitting in Cyprus or in Scotland, do you really want to get involved into that? Listen, the credit is not my worry at this time.
No, same for me. Like obviously, like there is some cracks in private banking and the shadow banking, but we really can't know what that is.
Yes.
Right. So it becomes a little bit more difficult, and obviously paying attention to this is definitely something that I'm gonna at least keep doing because I believe is important. But I don't think it's like a major risk right now that we have to be panicking and selling everything and trying to get just cash because the liquidity is just going to disappear.
Yeah, and also the private credit defaults a few weeks back hit like Blackstone and Apollo, the two private equity companies I follow, got a hit because of the private credit. But again, it's not a large market. It's not like if you tell me JP Morgan is in trouble, okay, I'm like, it's like code red, start selling. The ship is
too big to fail.
Yes.
Too big to fail.
Yes. It doesn't get bigger than that. But yeah, it's not a major worry. My worry is not really like fundamentally. It's mostly sentiment for the time being. A lot of people getting uncomfortable I'm getting uncomfortable in some days, and I don't know, maybe like you spend a few years in markets and then you start getting more conservative, like with the craziness that you see around you.
Yeah.
Maybe because I never bought into crypto like no, I bought into crypto, but I'm not like 60-70% of my portfolio in crypto, which is like a different kind of investor than equities. Crypto investors have like a different way of seeing things, and they're more comfortable with more risk. I'm not, but credit is not one of my concerns for the
Yeah.
time being.
Like some of the things that we're seeing because you're talking about like the different investors that we're seeing, and we're seeing sort of, I don't even know if this is as much retail as potentially hedge funds and big
Mhm.
players, but we're starting to see, for example, margin levels starting to spike up, right? So
Yeah,
we are currently at the highest levels ever in the stock market, and that's not even including leverage ETFs, leverage products, derivatives, all of these different things that you can use in order to increase the amount of risk you're taking. Because I'm in a couple, you know what I mean? I'm sitting on TQQQ, which is triple leverage Nasdaq. A 30% drop down on the Nasdaq can liquidate that position, and I'm fully aware of that, but many investors don't do that. And there is a lot of volatility, because usually what you end up having is, for example, if I go into an options contract, the market maker has to somewhat balance that trade to make it risk free. So they're going to buy the assets. But what happens when we go to the other side, right? The gamma squeeze goes into the negative. And we can potentially see the reason we're seeing the massive volatility is because we are now starting to understand that there's a lot of leverage in the system as well, right?
so what was the VIX this week? Did it go
VIX
above 20?
22, I think it peaked at 22.
22 is not that bad. I mean, we've seen worse in the last 6 months. Maybe because it was the timing, and maybe it was like without a warning. Usually we get some news, we get some bad news, and then the market follows. This one was of a sudden, and that's what worried most people. But 2020 VIX is not. I
It's not
wouldn't.
crazy. We still
No,
haven't, like, it's like, if the thing is it's at levels where we could see the correction sort of calm down, because
yes,
we are sort of elevated, but we're not at peak fear. It's
yes,
not like, I think in like a couple of weeks ago we saw higher VIX.
yes,
So something to pay attention to for sure, because
and
it tells you that there is options buying. Both there's more puts being bought and more more
and
hedging
the margin like is the highest levels of margin like in
in
decades
history.
in
In history,
history.
1.2 trillion dollars worth of margin.
Yeah, but also there are more retail investors ever in history now investing. So you have to take that
Correct.
into consideration,
That's the
right?
reason. That's the reason I mentioned the amount of people that were
Yes,
investing, because we got
yes,
to also take into consideration that is a fact, right? It's
yes,
a fact that there's a lot more people coming into the markets, and if you can borrow some money in order to increase your exposure, some people are actually doing that just because maybe some
yes.
people are looking to make a little bit more money as the rally continues to spike up, and
Those
they're
numbers are
getting the reality of it.
those numbers are going to keep rising. The margin numbers and the retail investment numbers, and like people investing, period, is going to keep increasing because soon soon people are going to realize that's the only way to make some money in this world, like be in markets.
Yeah.
Yeah,
Yeah, being in markets is a way to definitely guarantee a little, at least that your money doesn't depreciate in value.
yeah,
So it's important to keep that in mind, right? Again,
yeah,
investors are not going back to cash. It's like you're buying something, even if it's
yes,
a treasury, because I think we saw even the treasury yield, the 10-year treasury drop down. So
mm,
there's people going into, hey, I've made so much money with this. I just grab it, put it into a 4%. I'm more than happy to make 1% for the rest of the year on my gains. But
hmm,
they're not selling everything. They're not selling everything, and there is risk appetite still, which is something very interesting too. All right,
yes.
let's talk about the crypto crash. Right, crypto's crashing. It hasn't done anything. It's been super weird. It's been tricky. Right. What are your thoughts on it? What are you seeing? What are you like? Because I know you're not a crypto investor, but
I'm not
what's your gut telling you here?
okay. So I have some crypto, but it's like in the single digits, and I don't really. It doesn't really affect me if they have like a bad day or two. It was like a bad week, to be honest.
It's been
Uh,
like a month actually. Like crypto's not nothing. alts have
Yes,
been crashing like crazy too.
yes,
So
and everyone's expecting all season. I'm expecting all season, but mm, we don't see anything, and we see Ethereum and Solana, the two that I'm invested, to have like 10% drops in a single day, and then back to back days. Bitcoin was barely hanging around above 100K. Is it above now or is it below?
it's above. So it you know what told me about the bounce, and it was the fact that we couldn't break under 100.
Yes.
We broke, like, I think we touched 95, like 97, and then we just came back up. So it's like we've
Yes.
been touching on the 100, and I was like, look, for me, Bitcoin right now is telling, like, in all honesty, pre-market, if Bitcoin is up, the market ends up green, and if Bitcoin is red, the market ends up red. The whole week, that has been the thing.
Yes.
It's been crazy for me. It's like, I'm like, today's gonna be green. Today's gonna be green. I'm just like, obviously, like, causation and correlation are two very different things. I'm not saying that it's crossing it, but it's almost like acting like market sentiment or risk on sentiment. It's telling you, okay, maybe there are people here that are looking to buy, and maybe there are people that are looking to sell here. So it's been a very interesting approach.
Okay, so this movements lately from crypto, did did it change anything to your investment perspective? Like, do you with whatever we saw in the last couple of months, did it make you to want to invest more in crypto, or perhaps less?
No, I actually increased my position, which I actually, in my eToro portfolio, I actually never had any crypto. Like, I think I had a little bit of Bitcoin, and I potentially had a couple of the miners. And obviously, like, a lot of people were talking about the range between 108 and 120, right?
Mm-hmm.
Even our other, like, our other analysts, Mimi
Mm-hmm.
and Timothy, were talking about these numbers, and it was just like, okay, whenever we sort of touched the 108. But one thing that was like a similar pattern that I was like getting sort of accustomed to, it was like everybody was telling me the 108 level and the 120 level, the 108 level and the 120 level. So I was like, we are either breaking out of the 120 level, because it was almost like the crypto markets were in sync. Everybody was saying the same thing. And I was like, huh, interesting. So I purchased a little bit in 108. And then I've been looking at potentially increasing my position at this current levels, because maybe this is just a capitulation event that creates the rally going up. We still, again, there's no clarity or full guarantee, but it's just like maybe a lot of people are getting just shaken out of the market before we continue the rally up. Because it just doesn't take a lot of money to freak the markets out. I mean, we saw that like a $2 billion trade ended up creating $20 billion of liquidity, of liquidations. So it tells you, it's like right now the markets are sort of finicky in a sense. But yeah, I mean, Bitcoin is sitting at 1015, just above 100, right? And Ethereum is sitting at 3,300.
I can't wait to get out of Ethereum and buy ExxonMobil. I don't know how many times I told you that in the past. I've been telling you like every day.
The thing is, like Tom Lee right now is buying heavy into.
Tom Lee is expecting Bitcoin to be 250 by year end.
He's being so right.
He's been so right on so many things, and you know what? I like him. I like him a lot because he's been so right. And at times of panic or uncertainty, it's almost like a calm voice coming on CNBC and putting things in perspective. But sometimes I'm watching the show and I'm like really? Like, did you really just say that? And it's almost
and then he gets it right. And it's like, God dang it. It's like,
yes.
So, I mean, obviously, at some point he will be wrong. Every single investor is, right? But like, do we get to one? Like, I just don't see the end, right? Like, there's still so many bullish catalysts for Bitcoin, the crypto markets, and all of that around. Even the administration is in favor. So it'll be interesting to see what happens with that. I just right now think that is, hey, I don't know. I find that as opportunity, because it's like a couple of months ago, it was like, oh my God, we just went over 100. And now we're going back to 190, and it's like, whoa, I can buy at 90. Like, please let me buy some. I just bought some. Look, I'm willing to hold it, right? So it's like, and it's not a crazy part of my portfolio either. This is where I would like leave the analysis and the everything to Mimi and Timothy, because they definitely know more. But Yeah, it's an interesting one. It's an
But
interesting
at
one.
the same time, the little voice, the, the little voice comes to your head and says that we're at the end of the 4-year cycle, or maybe we'll have a 5-year cycle, and you don't know
Well,
which one is it. So, are you buying now? So you
maybe
can,
it's a 4.1. You know what? Because if everybody's expecting a 4-year cycle,
yeah,
see, if everybody expects something to happen, the opposite will.
the opposite happens. Yeah,
Right, so it's like everybody's like, "Oh my God, we're just gonna get the rally," and it's like we're gonna get the rally when when retail is not looking, when mom and pop is not paying attention. I still haven't had my cousin or my aunt or my auntie or come in and be like, "Hey, how do I buy this thing you called Bitcoin?" I haven't had that yet, so
it's interesting what's happening with Bitcoin lately. And now I think Timothy sold his altcoins completely.
alts. Yeah. He went out of his alts. He went
It's
out of his
only
alts.
in Bitcoin now.
Yeah, he's Bitcoin, Ethereum, and yeah, I believe so. So he's delevered from, like, it was just like I do feel that it was a risk off sentiment into like, hey, we're going into the safety place here, which funny enough, Nvidia has been more safety and like has more of a safety valuation than many other companies too. So that's why I'm not selling my Nvidia. But hey,
Nvidia makes more sense than the majority of the market, but all the people, all the investors, more conservative, more the people that like to see ratios and stuff. They like the investment to make sense on a piece of paper.
yeah,
Nvidia doesn't really make sense on a piece of paper.
it does not.
It does
It
not.
does not. But it's
It
also
does to us.
yeah. But you know what's funny? It makes his money on a piece of paper because they're the designer of the chips. They don't
No.
make any chips, right? They
No.
don't have the infrastructure. They don't have the build out, right? So it's like it's such a different company. We've never seen sort of the designers take such a big
Yes.
cut, right? So it's usually the manufacturing titans that are making the profits and the oil moguls. And
Yes.
right now it's, hey, this is the cool design, make it. It's like obviously like it's a double-edged sword, obviously, because if all of a sudden it changes or it pivots, we could see some sort of shift, right? So I'm going to pay attention. But let's move to the next one, which is the geopolitical story. The geopolitical story I don't think we're going to talk here much, right? Because it's like it's been sort of like cooling a lot, right? We still have the Ukraine-Russia war, and obviously that's having some impact, but it seems to be limited right now. I mean, I'm just not like we are seeing escalations by both sides. I think Trump is trying to get the deal, and Putin is talking pretty to him. But the reality is that the action, like, you know, it's like in geopolitics is what you're saying and what you're doing. If they don't align, it's you want to raise tensions, and we're seeing that, right? I think now Ukraine is hitting oil infrastructure and energy infrastructure from Russia.
That's the only effect. That's the oil price. The only effect right now is the oil price, and nothing more than that. As far as China and the U.S. trade talks, trade tensions, whatever you want to call it. I mean, it has been priced already since like April, May. I wasn't in the camp believing that it was going to be like an easy deal, and it's going to take some time. They go back and forth, and Trump just tweets and says, I'm not going to meet Xi," and then he meets him, and again, nothing burger. But again, if this thing goes for another 2 years, then it has an impact.
And if we start seeing tomahawks in the picture, and all of a sudden we see intervention by any of the big players.
You know what? Nobody in the right mind would give tomahawk to the Ukrainians, because that's World War III right there.
Yeah. Well, any escalation like that.
Any escalation from, yeah.
No, that's definitely something like, look, like I pay, like it's interesting because I'm more scared of the end of the war. Because there's this saying that kept popping up in my feed that was like, buy the market when the wars of drum are playing, and sell the market when the trumpets of peace come. You know, so I was like, okay, this is interesting. Obviously, like we don't want any war or any major escalation of the conflict. We would wish for peace, but something to keep into consideration is just the idea that, hey, this could get out of hand. Hopefully it doesn't. And we pray for all of the people affected.
Since 2022, so the market the market got used to it. Market got used to like of two major countries having a conflict, like just around Europe.
Yeah.
In a different time, it wouldn't be as comfortable. But the 24-hour, 24/7, 365 cycle that we get a new story every single day, I guess it makes things for market a bit more easier to deal with.
Yeah.
Again, not one of my worries for the market.
Right now, it's not. It's not unless we get an escalation. Like if we get China start a blockade against Taiwan, that would that would start freaking me out a little bit. Maybe maybe the Nvidia position might be a bit scary one, right? TSMC could take a hit. The chips infrastructure could. But right now, I mean, in terms of the trade war and all of the different things, again, we'll talk about that one in last because it was like at least. Well, actually, do you want to talk about the trade war first, or do you want to talk about the Federal Reserve? I think the trade war.
Okay, let's talk about the trade war.
You know what? Because it's like the trade war. I mean, we've seen sort of like a de-escalation finally. Tackle comes back to play, right? Trump always chickens out, and even this time around, she has backed off too, right? So
the Chinese bought some soybeans.
Correct. And they're starting to take away all of the restrictions of the ships, and we're starting to see how the minerals are starting to get deployed, and we're seeing how the AI chips are going to start being sold in China. I think AMD is already allowed to sell.
Yeah, but the US doesn't want to give the latest chips to the Chinese. So it's almost like both parties don't trust each other, and they're going to give just enough to keep them happy. Is not it's not like they're trying to help each other. They try to help themselves.
Yeah,
and they do just enough to satisfy whatever deal it has to be made. The Chinese started buying soybeans after like a 3-year period, the first time after 3 years. Trump was saying that he was open discussing the latest cheap exports to China, but we all knew that wasn't going to happen. At the same time, Jensen Huang said the other day that China is going to win the AI race. What he was trying to do?
He tried to backtrack it.
Yes.
Right. So he was like, "Look, like they're very close. They're very close, right?" And obviously, like again, this goes back to the idea that is not about the infrastructure; it's about the developers teams, right? So it's like China has half of the developers of the world. They just have such a big population and so many people working on this that, I mean, we saw them catch up extremely quickly with DeepSeek, right? So it's something to pay attention to. I mean, China is definitely a contender. I wonder when it gets to a point where you start investing in Chinese companies, you know. But I mean, like, if the thing is just like the trust that I have for Jensen compared to all like a lot of the other big CEOs like Elon or Sam Altman, like it's so much stronger, right? Like if Jensen says it, I believe it, right? Like I don't think he's a guy that's going to be telling you just for the sake of pumping the stock price. Like it feels that it's something that he's actually passionate and like fully on about, you know?
Yeah, but at the same time, he's in the position. Tim Cook, am I saying his name right? From Apple, Tim Cook.
Yeah.
He's been in that position with Apple in the last like 8 years between the US and China, and trying to balance that relationship, because you want your Chinese customers and you want your American customers, and you don't want to take sides. You are the CEO of a company, and if you don't do the best thing for the company, you're going to be replaced. Even though if you own the company, you started the company, they're going to replace you. They did it to Steve Jobs. Make no mistake, they can make it to anyone.
But the thing is like, but I think he is. You know what I mean? Like, I actually believe Jensen is.
He's playing politics, and that's the right thing to do, because you don't know if the trade deal, like in 3 months from now, gives the opening for Nvidia to sell to the Chinese. That's 15% of their revenue.
Yeah, and it could continue to. I think it's 40 billion total if they were able to sell to China.
Yeah.
The revenue hit is a $40 billion hit.
Yeah, and you want to keep the Chinese happy,
Yeah.
if not with chips, at least with rhetoric. So you want to keep the Chinese happy, you want to keep the Americans happy. So he's playing the politics like a good CEO should, and exactly the same playbook as Tim Cook. Tim Cook is moving plants to India, but at the same time he's making appearances in China, trying to please. You see, that's what
You
the
got it.
CEO.
The thing
Yeah.
is you kind of got it, right? Like it's still a big part of the market, right? So
Mhm.
you're
I told
playing
you.
those. Yeah.
I text you as soon as I saw the comment. I text you. Your guy is playing a game there.
Yeah. No, and I like the thing I like about Jensen, it was that, whenever the chip ban came up to effect, he wasn't
Mhm.
like, hey, I'm gonna go on Twitter and I'm gonna tell you guys why China is bad or Trump is bad, or he was just like, look, I'm gonna get on my plane and I'm gonna figure this out. He went, he did the work, and then finally he came out and it's like, look, like we understand, but we disagree with the decision just because we believe that it should be built on American stack, and those developers should be building on American technology, because that's what gives you the power, right? So we see that story there, right? So hopefully that it gets resolved. I mean, like I would love to see how the Chinese start sort of like creating and innovating in that sector,
The
because it's
innovation,
like I want to
the,
see how this plays out.
the,
I got some Alibaba, you know.
you know, the innovation is not something the Chinese are known for. That's
Well,
far.
do you know the saying? America
What?
innovates, China
Yes.
copies, and
Yes.
Europe regulates.
Regulates. And Peter Thiel, one of the co-founders of Palantir, wrote a book, From Zero to One. Going from zero to one, starting an industry, whatever that's electric vehicles or like AI, you need to be innovative. You need to have innovative minds. And the US is known to do that. They're going to figure out what the next industry is. And who is winning the AI war? So far, I think the US is winning the AI war. Winning, they are ahead because they started early, because they came up with this thing. It was a concept just a few years back, and then they came up with the chips, and they came up with ChatGPT. And then when it's out there, then the Chinese can throw an unlimited amount of money just to catch up.
And human capital and
Human capital and all that.
Yeah.
One guy has to say go, and they go. You don't have all the bureaucracy the US have and special interests and all that. So, but yeah, I'm remaining fully invested in the United States. I'm not saying China is not a place to invest. I'm just. Do you remember at the summit, Harry asked a really good question. He said, if you're okay with China, then you should look into Alibaba. If you are not okay with China, if you're not feeling comfortable with China, investing in China, then no, then it's fine. So it's a question you have to answer first. Are you comfortable investing in China?
Yeah.
And then, so I'm asking you, are you comfortable investing in China?
I mean, like with the size of the portfolio, yes, right? Like it's not gonna, right? Like if I'm expecting China, like the thing is China's valuation. I think the China PE is sitting at 9, and the United States is sitting at 27. So it's like there is enough sort of hit on the multiple that I'm actually willing to take the gamble. But again, it's not a massive part of my portfolio. Like it's not going to bankrupt me if China starts lying through their teeth.
Yes.
Right. So it's like I'm willing to take part of the risk. Obviously, like it's something that's limited. It's not going to bankrupt me in any case whatsoever. But I like, it's like I like Alibaba. You know what I mean? I like Jack Ma too.
You wouldn't be overweight China.
No, because you get more clarity, right? I prefer the clarity. Don't get me wrong. But I do like a little bit of risk, right?
If you say one more no, I'm gonna believe you.
It's the truth. Just a little. Like I want to touch the water and see if it's hot. If it's not hot, maybe I'll go a bit more. But right now, let them grow. Let them do the work.
And you know what I noticed on eToro? The people that are in Australia or Southeast Asia, they are quite exposed to China, but they are closer. They know more.
They get a feel.
They get a feel. Yeah, we are so far away, and so the geography and where you are located and based has a lot to do with your investment.
Ah,
What's your
the problem, the thing I dislike about it too is the fact that it's like it's not just as easy as to get access. You know, it's like you're buying an ADR, like
mm,
you're not buying the stock. There is a chance that they just tell you, oh, sorry, like we're just upset. They get delisted.
mm.
You run into there are risks. There are risks. I'm fully acknowledging that, right? So
There's
yeah,
another list of risk on top of the risk that you're dealing with
correct.
the regular. Yeah.
Yeah, so China is just something you got to be paying attention. Oh, is Trump happy? Is Trump did
Mm,
Trump wake up on the good side of the bed
yeah.
now? Oh, did she is she gonna actually do what he's saying? Maybe he saw one picture he didn't like about Winnie the Pooh and he's upset now. So all of a sudden, you start. I mean, if
Mm.
the summit is in China, I'm gonna get in trouble for those comments. But long live she, long live she.
Toro is not operating in China, so
Yeah,
uh,
but it's like that's also something that deters me. It's like there's no real competition in China. It's like
mm,
state says I'm going to build this, and they build it, so they have a lot of sort of subsidizing, a lot
mm.
of support, a lot of things, and it's like you're not competing against the big names. Like what happens if you have to compete with the big boys? You know?
Okay, so one more thing, something irrelevant. At the summit, I talked to my friend Max Molter, shout out to Max. Um, he went to China, to Shanghai for 6 months for school. And I asked him, like, what's going on with China? He told me, it's amazing, it's so clean and
It's
safe and food and all that. And I believe it.
yeah, yeah.
But what he told me is like, nobody speaks English. Nobody speaks English. But the language of the internet is English.
Yes and no.
The language of money is English.
Yes and no. Because they're starting to like, and I'll tell you because it's like there are some markets where the Chinese are ahead. It's crazy. It's crazy.
Okay.
The Chinese, it's what's the China population sitting at? 2 billion?
No, they're not up there. 1.3.
1.4? Okay, 1.4.
And
That was
India is
2024.
1.5.
Yeah,
India is 1.5 or something like that.
correct.
1.2.
Yeah, India is 1.45. Yeah,
India is more
2024.
expensive than
Yeah,
than the US.
it was for a while. You know what was the thing in April that made me buy like there's no tomorrow?
Well,
The fact that India and the United States were about the same price, and
mhm.
India surpassed them in value. And I was like, I have lived in India. I know what India is like, and like there are brilliant people. Don't get me wrong, but the Americans are freaking ahead. I can guarantee you.
Yeah,
Yeah, like yeah, maybe labor is a bit cheaper,
yeah,
but
yeah,
I've lived in. I like. Don't get me wrong. I love India. The valuation makes sense. But if you tell me that the United States or India, I have to pick a horse. I, I America's a car. You know what I
yeah.
mean? Like fuck the horse. You know what I mean? It's like I've seen it. So it's like there's still like India still needs that. Like we still like India still has the caste system. You know what I mean? So it's like in society, and it's just like, bro, like I think everybody's equal. I think I'm like I like the freedom. I like the idea that you can come up from nothing and become something great, right? Like the American dream. So just from that alone was like a big reason why April was just a no brainer for me.
April was so easy to pick because everything was on sale, like like big time. You didn't have to look elsewhere to compare.
Yeah,
You had to compare whatever the price was in April compared to 2 months before,
correct.
and it was like an easy decision to make to buy
Yeah.
the
I
Max
mean,
7.
I mean, you saw valuations get really low. I mean,
Mhm.
Google. Oh, that Google trade still.
That Google trade
I'm
is.
still enjoying it. The new suit
Yeah.
I got. Thank you, Google. All right, let's talk about
That's,
the last, but
that,
not.
suit, that suit was like 3 shares of Nvidia right there.
Yeah. Back in the day, freaking a couple more of Google back. It's
It was
okay.
a, you know what? I'm getting like the flashbacks. I'm with you at the store and you're trying the suit and I'm just like there reading, and then you're asking the guy what's the damage, and he says it's telling you how many Nvidia shares. Like that's the currency we are playing with.
Yeah, right now it's like at this point, yeah, it's better
Yeah,
than
yeah.
how much. Because it'll be interesting. I'm gonna remember how much I spent, how many Nvidia shares, and then a year from now, I want to see how much was the cost of the suit based on the Nvidia shares I would have
Yes, you might get it.
had. Yeah, But yeah, okay. Last but not least, we gotta touch on the last point. Federal Reserve.
Yes.
Are they dropping the puck? Are they making a mistake? Are they fumbling the football? Are they scoring an own goal?
I wouldn't say so because they are in the dark as well. And perhaps they should have started cutting like a bit earlier.
But you know, it was like the problem. Okay, go. You finish your thoughts, and I'll give you mine.
So at the beginning of the year, I called for 3+ cuts. I think we're getting it based on the data we got yesterday with the October losses, job losses. I believe we're getting another cut in December, so that will make them 3. But they are a bit late. But they are always late. That's what the Fed does. They are always late. They are always late to cut, always late to raise, always late to stop doing QE, QT, you name it. Whatever they do,
they're late.
All the options that they have with the money printing, they have like different names for money printing. They disguise it like differently. They're always late. So am I surprised they're late this time? No. But yeah, I mean, to be fair though, the soft landing is still on the table, right?
Yeah, it's been great. I'm sorry, but I think Jerome deserves the freaking Nobel. Like I'm in the camp.
He did a good job. Now we're just saying that he could do better.
Yeah, like we're looking for. It's like no, we need to like both have all that we want. Like you know, it's like it's not enough that we had a nice dinner. No. I want the pretty lady, the car, the white picket fence. I want all of it, and I want it on credit. You know what I mean? It's like, bro, relax. Like it's been going. You know, it's like we're getting to a steady level. I don't know. My thoughts with the Fed are that look, like Trump with the tariffs created sort of like this smoke screen, right? They would have cut already if we didn't have the uncertainty of the tariffs. Right. And the problem was, you know what it was? It wasn't even the problem of the tariffs. Like if Trump had come out and he had been like, hey, guys, look, we need some money. We're going to do some tariffs. We're going to do 10% across the board, which was what he wanted to start with. But he was like, no. Like, let's just like put 50% on everybody. And it's like, oh, my God, this is a major issue. And this is a major thing that could affect markets. And then he started rolling them back and doing all these things that create, like, as we say, we're creating lack of visibility for the Fed. They're not able to actually predict what the changes are going to be based on the things that we're doing, right?
To be fair,
in addition to that,
yes.
In addition to that, Trump has decided to freaking, like now with the shutdown and everything else, it's just like, you know what? The smoke ring is not enough. Like I'm going to take a little bit away of the smoke, but I'm just going to put this mud on your windshield. Right here. And now you can't see nothing, you know? So it's like all of a sudden it's like, wow, you know, it's like now I get why they're starting to become a little bit more hawkish is because like they have no idea what's coming. They just have no idea. We have no idea as investors, you know, and it's like they have a decision to make, whether it's like, hey, if we print too much, we could create some serious damage to the economy that could be seen and felt for the next 3, 4, 5, 6, 7 years. So that's where I'm at. I'm like, look, like I understand why. Like, do I want them to cut? Yeah, but it's a want. I don't think they need to.
Okay, so my view about the tariffs is like he made up his mind before he even got elected about tariffs.
100%.
Because someone told him like back in the day, the US was making so much money from tariffs. It's like easy money. All the people want to sell in the United States. So why not just put some tariffs? Other countries do as well, so why not us? So I get it.
Yeah.
He couldn't just say I'm putting 10% to everyone because everyone would say, you know what? We're gonna put 20% of you unless you take the 10% down. So the way you do it is you ask for the moon and settle for the stars, or ask for the stars and settle for the moon, whatever.
Okay. Yeah. Okay. The analogy works better like that. Yeah.
Yes. So you ask for the impossible, and then you settle for what you wanted to begin with.
Yeah.
Okay. That's Trump. That's Trump negotiating 101. As for the Fed, they're going to stop the QT December 1st. That's what they said. That's good news. That's adding liquidity to the system by default. Instead of getting liquidity from the system, they're just gonna let it be to remain to the system. The balance sheet is gonna be 6 trillion. They started with 9 trillion like 3 years back, which is a good decrease in 3 years, like 3 trillion. You know what? Some people expected the Fed balance sheet to keep expanding like indefinitely. But again, Jay Powell did a good job and dropped the balance sheet a little bit. It's not completely ridiculous to be 6 trillion. It's better than 9. And give him some leeway in case something happens to start doing QE, right? The QE is always incredible.
Yeah. Go. Sorry.
So, yeah, the Fed played it the best way they could.
Yeah. Could they played it better? It's like, yeah, on hindsight, you know.
You can always play it better. Yeah, on hindsight.
I should have bought Nvidia at IPO. I mean, yeah. Now it's fucking no brainer, but obviously, like they're running. Like it is.
And you know what? I would be so happy if Trump reappointed Jay Powell for another term. I don't think he won't. Yeah, but let's say he would. I would be so happy because the guy they're saying to put as the Fed chair. I showed you that guy right on TV the other day, bro. It's like a crypto guy. I have nothing against crypto guys, but don't get one as the head of the Fed, you know? Again, there's a committee. It's not just one person. They all have to agree, blah, blah, blah. But yeah, the head of the Fed has to be someone that we respect and we know that it's going to do the right thing if something goes wrong. Yeah. I don't want like a knucklehead. And the guy, I don't want to say his name, but
but the thing is like we're gonna get like they're still trying to decide who's gonna be like even Bessent might even run for.
That would be completely ridiculous because they said he's going to be the first person to hold the Fed chair and Secretary of Treasury. That would be ridiculous. I don't think they're going to go there because that's just. But at the same time, you said that the Fed. Like you said, this is what it's the case that they don't know what Trump is going to do. That's the Fed independence. Don't ask. Tell. We're not asking you. You're not asking us. You do your thing. I do mine.
Do our thing.
Yes. But I would like the Fed to know the unemployment data before me.
Correct.
Are we learning the numbers the same day?
You know, it looks like it. It looks like it. It looks like it. Like
they gave 20 minutes before us.
Yeah. And it's like, bro, like just give it to them. Like I'm okay with them knowing. Like just send it on a nice, pretty envelope with a couple of people and just like give it to them so they can make the best decision. That's it. That's all I want.
July 31st. It was July 31st was a revelation that the numbers might not be correct. Is that what it was? Or am I getting
no, like they had to be revised, no?
Yes, it was the FOMC meeting.
Yeah.
And we got one story, and then 2 days later the market
was like a massive revision.
Yes, so they didn't know either.
They were expecting it. They just weren't expecting it to be so bad. You know, it's like because like we've been missing to the like I think all of the revisions are coming in lower than expected. Yes. It's like but yeah, I don't know. Like if, for example, like let me ask you this.
Yeah.
If Trump gets his hand in the Fed and they lose the credibility and they lose their independence, do you stay invested in markets?
That's a good question, and I don't know the answer because Trump only has like 3 years, and he has to put 2 or 3 more people in there in order to get some leverage in the committee. And the thing that gives me some comfort is that Jay Powell was Trump's guy, right?
Correct.
So what you say at the interview, it's one thing because they want to get. Listen, that's a very prestigious job.
Yeah.
Okay, you
Oh,
have a
yeah.
lot, you have a lot of power. Okay, you get on front of the podium and you can ruin markets just so you can make your evening, right?
Yeah.
So J Powell has a lot of power. So what people say in the interviews and what they actually going to do once they assume the role and they understand that there are actually people's lives on the line if you do the wrong decision, that's what gives me comfort that the next guy even might be like a crypto guy or like one of those people that listens to Trump too closely. Once he gets into office, he's gonna see the realities of the job and it's not gonna get crazy. So
Yeah.
with that, I assume that nothing is gonna go crazy with the Fed.
Yes. By the way, Dimitri, we're live.
Yes.
Riverside messed it up. So
Great.
we're live. Zach says hello.
I didn't post
No,
it.
we haven't done anything crazy. But like the thing is just like, you know what I really like about Powell? It's like Trump is like shooting at him and he's like not even phased. Like he's just like, it's not my job to comment. Like I don't care. Like it's not like he can say whatever he wants. It's not my job to comment. Like that's not why I'm here.
You're talking about J Powell?
J Powell, yeah.
Yeah, because they have to stay out of
Exactly.
what the administration is
Right?
doing. It's not their policy.
Correct. And it's just like,
Yeah.
and I think he has done that so correctly.
Yes.
Like he's like, I don't think he's gone like the job and he's stayed within the parameters of the job
Yes.
fantastically.
Yes.
That's the thing I like about the guy. Whether he's gotten it right or wrong, like people are gonna make mistakes. He's not making the decisions alone. It's a committee for a reason.
Mhm.
And you're trying to do the best with very smart people. Like I think they're very smart people, but they don't have a lot of credit. So that's why I like it. I don't know. I think he's being super professional. Even you have Trump at your freaking door knocking at you.
Twice.
And the worst he's ever done is being that, it's like, I think the worst thing that has ever done is Powell is being close the fucking door. Where the microphone was left and there was an activist in the room and he was like, just close the fucking door. Like that was the worst.
No, that wasn't the worst. The worst was we are not thinking about thinking of raising rates, right? Like, but that was in the pandemic. At the time, it gave us comfort.
Yeah.
After the fact, when the inflation spiked to 9%, then we all say, oh, you shouldn't have said that again. Context. Yeah. But I agree with you. He deserves the number price.
Right, double price. Give him he's gone through what? Like the pandemic. He's gone through Trump's tariffs.
Inflation.
He's managed to get it somewhat down to a level where it's at least manageable, even though it's still sort of drastically up.
He did a good job.
Yeah.
He did a good job. His legacy is like up there with the best ones. In my opinion.
Yeah, they hate on it. Like Trump has to hate on him, but I wonder if like the rhetoric behind closed doors, I wonder what that is.
You know what? I think everyone hates the Fed in some point or another, right? You need someone to blame. So the market is not doing well or is doing too well. Like if they're not doing well, it's the Fed to blame. If we are into a bubble, the Fed is
Fed to blame.
Right? So it's always the Fed to blame and whoever is at the Fed. So you don't have to live with it. But J Powell did a good job. Yeah, you know what? I would love to interview him.
Oh, it would be fantastic if we get to that level. Like if anybody's watching that can get us there, I'm more than down to have a conversation.
I would love to talk to him and not ask him about not asking about the mistakes and all that. I want to see the thought process of like, okay, you get into the meeting, how the thing goes. How do the data come? Because 3,000 economists are working for the Federal Reserve. So they're getting all sorts of data, except the unemployment data that they get it with us, right?
Yeah.
So I would like to hear the thought process behind the doors and how everything comes together before he gives his press conference. Trying to answer those questions, those three questions from the press, and always gets it like on point. Yeah.
No, and it's one because it's one. Like I've seen, like you've sat with me watching this the Fed, and it's like one word can have such a massive impact. One
Yes,
word.
he has to put everything so correctly, and his speeches are like prepared like days ahead, like so many speechwriters put together. That word has to be there and not there.
Yeah. I mean, like, yeah, I think it's Nick Temerios that from the Wall Street Journal, I want to say.
Mhm.
He posts the before and the after, and he will show you what the word changes are on the statement. And it's like,
Yes.
okay, like based on these changes, we believe the Fed to be more dovish.
Mhm.
And then you start sort of making predict like changes, and it's like, okay, like what happened to this statement? Okay, the statement is that, oh, there is this ooh here, and it's like minor, it's like,
It's an impossible job. It's
oh
an
yeah.
impossible job to do, and you have to watch the press conferences. And sometimes I watch them and I say something different than other people. Sometimes I see different things than most people. They say it's hawkish. I say it's neutral. They say it's dovish. I'm saying he's neutral because I'm comparing him to his last time, or
Correct.
to the pandemic, or to other. And depending who's asking the questions in the Q&A, right?
Yeah.
Because
You can see the experience versus the newbies, and
yes, some
yeah.
people they ask the right questions, and some people they try to get a reaction from him.
Yeah.
Like, are you really going to ask him about Trump? You know he's going to say, "I can't comment on that."
You just wasted your question.
You just wasted your question. Yes.
You just wasted it. Yeah. I'm not saying I could do better, but holy smokes, like some of the questions, and it's like,
So you're going to go to 5 press conferences, and he's going to reject that question every time. Why you keep asking?
yeah.
He's not going to take you seriously when you ask a follow-up about an actual question. So
Yeah.
I don't understand why people do that. But I would
Yeah.
love to be in the room and ask him a question. Oh, that's a
Okay.
dream come true. To be in the room and ask him a question, like a real question.
Yeah. Analysis, it'd be weeks of planning.
Yeah, my intro attack and walk into the Fed.
eToro Cam.
Yes.
But let
yes.
me tell you about retail investing. Oh, that's so good. That's so good. Yes. Okay. I think we've touched on all the points. If you have any questions, yo, Zach, thanks for staying with us and watching. I appreciate
Any
you.
questions? Any questions in the chat?
No questions. No questions. I say, like, we've only had one beer. We didn't advertise it at all. We weren't
Zach
supposed to.
That's my buddy. Hey,
Okay.
Zach.
So he's just been chilling with us,
Yes.
But yes, because it's like,
I see him at the
I
see him. I know him in person. He's a nice guy. I see him at the gym. Like, I haven't seen him like in a couple of weeks because I haven't been going as often. But yeah, he always asks me about you guys. He's one of the good
one
ones.
of the OGs.
Of the OGs.
Good.
Yeah.
Nice. Okay, but I think we've touched on all the points. I mean,
yes.
Anything else we want to talk about on here?
No, I think we covered everything, and we see how next week plays out.
Well, it's going to be interesting. I'm calling it bounce.
We have one more date to go through before we can clear NVIDIA earnings. And I'm positive they're gonna go. It's gonna go well. But
it's gonna be fantastic. In all honesty, it's gonna be fantastic. And the fact that they sold off into the earnings gives me a bit of hope that we might actually see them stable or potentially bounce back up to the all-time highs.
Yes.
Because Jensen is saying our forecast is based outside of China.
Yes.
So it's like, imagine, like, and I don't know. I actually don't know if they have started selling some of the chips to China, because I know that they had the last earnings. They talked about how they had like the licenses, but they still hadn't been selling. So
someone's knocking my.
Okay, all right. Let's stop it here. Thanks so much for watching, everybody. Don't forget to hit
the
like and subscribe.
When are we doing the?
Now.
All right.
Yeah, but we have to close it and then hopefully not be live.
Yes. All right.
We can be live.
All right, guys.
All right.
It was nice to see you on a
right,
Saturday night. Hopefully
You're
we'll
gonna say, okay, Demetrius, you're gonna say, thanks so much for watching. Don't forget
Yeah.
to hit that like and subscribe, and check out the description if you want to get ideas on what to invest in, and check out our copy portfolio.
No, I'm not saying that. You said
You're gonna
that.
say it. Say it. You're gonna say it. Say it.
That's too long. It's not. You are the host.
All right.
For
Okay. Say the short one. Say the short one. Don't forget to hit that like and subscribe.
Thank you for watching, guys. Don't forget to hit like and subscribe. If you have any questions, leave them in the comments. Make sure to follow all of us on eToro. Me, Nestor, Timothy, and Mimi, Cora Trace, Timothy Asi, and Mendoza 11, and Dim Theo 27. We'll see you guys next Thursday at the regular time. Peace.
Peace. That's awesome. That's content right there. All right.
Right?
Yeah. All right. Zach, thanks so much. Peace.